Continuing from my previous discussion on the type of economy that we are walking into in the upcoming market crash, I would like to bring your attention to the liquidity crisis scenario in particular, because there is no other surface indicators on the US economy right now that indicates an imminent economic collapse. Our GDP is rising, and so is the stock market. And although inflation is kind of rising, it's nowhere near the level that we had in June of 2022. And looking at unemployment, although it's kind of rising, is nowhere near the level that we had in 2020 during COVID. But liquidity crises include factors that's outside of natural economic operations, such as human factors or self-inflicted factors, which we had during 2008, and natural disasters or factors that's completely outside of our control, which we had during COVID in 2020. So, without a crystal ball, we cannot judge whether a natural disaster is upon us. But looking at the US economy as a whole, the biggest risk, which a lot of people have repeated many times online, is the US national debt, which, judging against GDP, it's accumulated to 119% of GDP in 2025. And judging based on this, and also the Buffett indicator, which is dividing the market value of the US against its GDP, sits at 217% as of June 30th of this year. So, looking at both of these metrics, the US is kind of like a person who is having a job that he's not qualified to do at the moment, but he's being paid based on this inflated value of himself. And also, he has this debt that is more than he has the ability to produce because GDP is lower than the national debt at this time. So, would you trust the US market enough to invest in this illegally employed person with heavy debt? Or would you be more conservative with your investments? Let me know in the comments down below.